Okay, I'm really unsure if you're going to be able to read what I have here just looking at the camera, but I'll give it a go for a few minutes and then I'll check it and see how it is. This is a visual presentation of the userx from the 1970 bull market and the current bull market. The blue line is the current bull market as it stands right now. We're in a wave 2 correction. And the black line here is showing the progress of that bull market from start to end. A couple of things I'm trying to point out. First of all, the major death runs are circled. There. This was the most recent one in May 2006. The life runs are in red, squares, rectangles, whatever you want, down here at the bottom. We've had really 4 major ones. So because we're still in the current one, let's discount that. So now we're down to 3. And I want to discount this one here where the mouse is moving around in 1982 because that was a corrective life run low. And what I mean by that, because the gold topped out in 1980 and it had a 75% decline, corrective rallies tend to happen pretty quick. And then of course, the bull market died. It had a fantastic rally, down it went, and from 1983 when it finished, this here whole rally only took like 8 months, gained 300% by the way, and then went into a long-term bear market for another 18 years after that. So I'm going to discount that. So now we're down really to 2 that have already happened. And this is what I want to focus on here. The first one, this is the top in the black line here in 1974. Here are the key points. It declined 75%. That was first. And then we had a life run low here in 1976. It rallied up from around, I think, $11.90, let's just say $12 to keep it simple. I think it went up to around 25, came back down, this was a major life run low by the way, and here it formed a second minor life run low somewhere around $15, and then it ran all the way up to 105 over the next couple of years. But here's the 2 key points I'm trying to get across. Number 1, it was a mid-cycle, which is just before wave 3. And wave 3 is the biggest and the longest, and the gains are phenomenal. So that was number 1. Number 2, the bottom had a double life run low, a major and a minor. The key was that the second life run low actually took place higher than the initial. This was a major life run low, more than 2.5%, I think, in that range, and probably longer in terms of the number of days. Let's just say maybe it was 7-8 days, whatever it was. And this life run low here was kind of minor in that it was averaging 2%, but it was 5 days. Here's the interesting thing. This marked the low virtually to the day before the great rise. Now the reason I want you to highlight this point is we are now in the same mid-cycle correction. We've fallen so far somewhere around 65 to 68% in total. So we're kind of getting down to that 75% range fairly soon. We had the initial life run low approximately 1109 in that range and had a quick little rally, 20%, and we've now gone far below that, and we're pretty much maybe in a matter of a week or so away from getting down to the 75% decline, which would match the previous cycle. Now the next point that I want to take out, and just to clarify again to make sure you get this, the major life run lows we're talking about all had a 2-year time frame from when the initial life run low happened until the final breakout. We've had another life run low over here, which is 1998. Had a quick rally that was approximately somewhere between 40 to 50%. Took 2 years. It didn't make another life run low, but it broke out, got above the trend line, and then the great bull market started. Again, 2 years. Here, 2 years on the life run low. We made death run high. Remember, you sell the death run highs and you buy the life run lows. The last death run high we had was in May of 2006, and sure enough, 2 years and a few months later, in September of 2008, again, two-year time frame from death run high to a life run low. But here's the interesting thing. Every one, with the exception here, and I don't really count that one so far because it was corrective in nature, so every life run low, with the exception of 1982 corrective rally, took 2 years from the initial life run low to actually break out. And this is my hunch. Now, I mean, I can be proven wrong in a heartbeat, and I'm just going by the data so I can try to establish some kind of an understanding of how the cycles work. So here we had the life run low in September. We made a quick rally, I think about 24%. We dropped below there, and now we have to figure, okay, what's going to happen? At some point we're probably going to do this pattern here again, is my best guess. Now, whether we form a life run low, remember this is a major life run low, and if we form another minor life run low, then based on this data, the rally should just take off and go into the outer atmosphere fairly quickly. But I'm also guessing, as an equal weighted guess, and we don't know because we have to let the reality happen and then we can judge after that, that let's assume that we get down around the 75% level. So that would be the userx in the $5 range if that was to happen. Another point I want to highlight also, really three things here. Here we had a death run high in May 2006. We had a decline. We made a further high. Here we had a life run low, we had a rally, quick rally, and we had a further decline. So in effect the prices dropped below the initial buy. Here the prices went above the original sell. 1998 we had a life run low, prices went up a little bit and then declined lower. So my logic is that the life run lows, patience is a good thing. You're going to get some kind of a quick rally, but I think that rally should, in most cases, the only exception is going to be this one here based on past history, the corrective rally at the very end of the bull market. Use a tight stop loss too, by the way, and make sure you get a life run buy, and then you'll get another death run up here, and that'll be the end of it. And then just stay away from precious metals for 10 or 20 years. Just to clarify the point again, that when you get the initial life run low, buy it, because you've had so many black candles in a row that you're going to get some kind of a rally, but sell it as soon as it violates it. Start drawing trend lines and sell when it violates that trend line. And because of the fact that 2 out of 3 have actually declined below that price. And the other important thing is time. There is no hurry. That you could simply buy quickly, sell quickly, and then maybe do a seasonal trade where you're going to buy in the end of October and you're going to sell in the spring, something like that. All indications are that from the initial life run low, it takes 2 years to get a breakout. The only exception has been this corrective one right here. So let's see how this one plays out. I'm going to update this every once in a while and draw some more lines, and we'll kind of get a sense of how the two cycles will eventually play out. Just as a quick comment, I hope I can fit it in on the 10-minute video. The decline here, lower than the initial life run low, was approximately 34%. Right now on this one, we had the life run low, quick little rally, and we're down further. This decline is, I think, about 35%, 34-35%, so it's pretty similar to the structure of the previous one, just so you can kind of keep that in mind. Another key point is from death run high, it's on average, and this has happened in 1976, 1980, 1998, and 2006. When you get a death run high, it takes 2 years to get down to the point where you're going to get another life run low.